let's talk about Bitcoin as digital gold. I'm Matt Sheriff, and I'm going to go through some interesting factors which attribute Bitcoin to digital gold, but then also how they're different and kind of what Bitcoin is doing to separate itself from that sort of connotation. So when we think about gold and how we get gold, we can kind of break it down pretty simply. So what we need is humans, and in the 21st century, we need machinery. So the way we extract gold from the earth is through digging and mining and extracting that gold from the ground in order for it to be used for various different things. And then how we get Bitcoin is a different yet similar process in terms of humans building supercomputers and different chips that require a lot of electricity to mine Bitcoin as these computers solve very difficult algorithms and mathematical equations that churn out Bitcoin. So one's extremely physical and one's extremely digital, and that's kind of the difference in that way. But second of all, so we know kind of how Bitcoin and gold are created in a sense, and then we have the scarcity component. So why is gold worth what it's worth? Because we as humans put value on it because it is scarce. And one of the big reasons is because it's a very simple metal, so it doesn't react with the environment, so it stays very consistent over time. And obviously for thousands and thousands of years, humans have used gold as a form of currency, as a hedge, as a backup for paper money and all that sort of thing. So one of the huge reasons why gold has value is because it is scarce and there is somewhat a limited supply, because if there was gold everywhere, on the street, it wouldn't be worth that much, because everyone would have it, and scarcity is a big factor in that. The exact same thing applies to Bitcoin. There'll only ever be 21 million Bitcoin in circulation, and that was basically from the foundation of when Bitcoin was created. The platform itself, the network, will only churn out 21 million. So in terms of scarcity and supply, there'll only ever be that much of it, which is an important factor too, because you don't want there to be an infinite supply, as we talked about, because then everyone's share becomes less and inflation starts to happen. So there are two main factors of Bitcoin being attributed to gold, and obviously one's extremely physical, one's digital. So if we talk about some of the things that are slightly different, if we talk about storage, to store gold is somewhat quite expensive, and it takes up a lot of room, because of its physical nature and the way that we kind of need to protect it because it is a valued commodity. And then if we think about Bitcoin, it's very easy and it's pretty much free to store it, as you can put it on a flash drive, or you can put it on a wallet on your desktop, or keep it on an online wallet. So in terms of storage, it's much easier to store Bitcoin than it is to store gold. From that, you could say it's easier to lose Bitcoin than it is to lose gold, as the physical component of gold, it's hard to displace. But Bitcoin, if you backed it up in a certain way and then you forgot the password, or you lost that certain backup and then you couldn't get access to it, well, that digital asset could be gone forever. So that's something to think about too. But if you back up your Bitcoin correctly, then it's very hard to lose. Transportation, which is obviously a big one. Gold has a hard time transferring in the digital era that we're in, and Bitcoin can be sent, country to country within minutes, sometimes within seconds. So that's something to consider too, as obviously it's hard to get Bitcoin from the United States to Africa in a good amount of time. The way our world works and how fast we move, Bitcoin can move more securely, quicker, more efficient than gold ever can. So that's something to consider too. I think talking a little bit about storage, but security. So the security of the asset, obviously we can try and store and protect our gold, but it's always up for grabs. It's something that's happened before, with governments or different entities that want to try and take control and take your assets if it ever comes to that. It's happened with gold before, even in the United States. In terms of security and being your own bank and controlling your own finances, Bitcoin is very secure in that way, in the way you can back it up, and you could even have a password in your head that's basically a digital bank and something that only you can have access to. And I always think this is always a big one in terms of record keeping and the different type of trust that we can have with certain industries and with the commodities and the assets that we have. And obviously the record keeping for gold is manual. There's a ledger, or there's a company, or however you store your gold. If you have it, then obviously that's different. But if you're putting it somewhere, then they have like a manual record of who owns what and how much somebody owns of gold in their vault. Record keeping within Bitcoin is automatically done. So the blockchain and the public ledger that network has, keeps everything up to date and keeps everything trusted and open and secure. So that's always a big factor too. And then counterfeiting is a big one. It's impossible with gold because you have obviously the certain properties that gold has that's unique to its own self. And then Bitcoin is the same way. It's impossible to counterfeit because when you're sending it, the network itself will only process Bitcoin, and the wallets that are designed to hold Bitcoin will only hold Bitcoin. So it's impossible to manipulate or duplicate because of the way that it's mined. So both are good in that sense. And going off that, authentication, which is basically, is this what it says it is? For gold, you would need a process to identify whether it is really gold, a type of test, or somebody who's very, very well trained in knowing exactly what gold is and how much it weighs and all that sort of stuff. So you've heard of fool's gold, which is basically something which really looks like gold, but it's not gold. So identifying what it actually is costs more with gold. If you have Bitcoin, it's already built into the network itself, in terms of the verification of Bitcoin through the blockchain and through the wallets that hold it. So in terms of when we name Bitcoin digital gold, there's a lot of factors to it. Obviously the scarcity is a big component, and then the way we kind of get Bitcoin and get gold is different methods, but in a grand scheme of things, that similar process of extracting it through the methodology that's used. And then there's plus and minuses to both, but with the way our world is moving, Bitcoin has seen massive growth over the last 8 years, and that's because of, the way it can move, how secure it is, how efficient it can be, that separates it from gold as kind of a hedge to the economy and something to put trust in that is outside the monetary system, that obviously gold has been used for a very long time. And the reason it's been used is because of trust and community. We trust it as a people, and we have done for so long. Bitcoin is something very new, but it holds some of those important factors that will make it something that people can, rely on, hedge the economy, diversify yourself, as a lot of people are doing all around the world. So there's some things to think about. I hope that kind of helps shed some light on the whole digital gold sort of connotation that Bitcoin gets. So I'm not sure if you found value in this video. Subscribe to the channel wherever it may be popping up in the video. If you want to know more about Bitcoin and cryptocurrency, check out my free newsletter below. A lot of good stuff in there, and then another video will be popping up that you'll probably be interested in. So thank you for watching. I appreciate it, and I'll see you on the next one.